Let's continue on the reversal patterns. Our second reversal pattern is the rally base drop. The rally base drop is formed by a rally movement upward, a base, which is consolidation or indecision, and then a strong, massive drop downwards. So we are waiting for price to come back up to what now is a supply zone, and we will sell when it returns here. So that's our rally base drop. Rally base drop, rally base drop. It has a rhythm, it has a ring to it. You'll get used to it. So now let's look at some real world scenarios. So here, if we look at US 30 on the 4-hour time frame, I actually traded these setups in real time. So we see a rally up, we see a base. So there's a doji candle, very small bullish body candle, not a lot of momentum here. And then a aggressive seller comes into the market, big drop. So what we'd be waiting for is price to come back up to this supply and give us bearish confirmation signals like this bearish pin bar. We have a bearish evening star here as well. So once price forms these, we are good to enter into the market. We're going to talk about entries in a minute, but this is a beautiful setup, high risk to reward. So if we enter into the setup here, place our stop loss here from our entry to this last lower low here, last swing low on the 4-hour. This is an excellent entry, excellent risk to reward. Now we take that sell and then price comes back up to the zone. So when price comes back up to the zone, we'd be looking for another sell confirmation. If we get sell confirmation in that zone, we are good to sell again, because it is highly likely that same seller, that institution that unloaded these big positions, it is probable that they have more positions here to unload. So here they unloaded even more, massive sell. Okay, let's look at another scenario. So this is US 30 again on the 4-hour. We have rally, base, drop, rally, base. So we have the what looks like indecision here, small candle, massive bearish candle, and price drops. When price comes back up here to the supply zone, we have tweezers and a bearish pin bar. Beautiful. In the supply zone, execution without a doubt, no hesitation here for a massive sell. This is how we will trade with the banks, with the big institutions. So open up those charts, start to look for the rally base drop. Now I have one more example for you. Here we have a rally, we have doji candles here. So that's our base, indecision. Then we have bearish candle, big drop here, big drop. So this is a massive drop to the downside. So that lets us know, that's a sign that is highly likely that this is a supply zone. So we won't look at structure here and say, oh, this is a break of structure on the 4-hour. No, we are looking to sell when price comes back up to this supply. And we're going to learn a little bit more about the techniques of entering and how we will know if supply or demand is invalidated. But here, price major drop, we're looking for price to come back up to this supply. It gave us a tweezer top. On the lower time frame, it probably gave us beautiful price action for us to enter somewhere around here, have our stop loss above for a massive sell. Okay, so open up those charts, start with the daily or the 4-hour, and start looking at rally base drop pattern for your given pair. Leave your feedback, comments, and questions in the comments section. On to the next video.